Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're looking at a new IRS form for reporting shareholder basis. If you haven't signed up yet for our federal and California tax update webinar, you can see a schedule of available dates and get registered. Sessions are selling out, so secure your spot at caltax.com under the webinars tab. Starting with the 2021 tax year, the IRS has added a new form that will be used for figuring an S corporation shareholder's stock and debt basis. The new Form 7203 replaces the worksheet that was in the instructions for Schedule K1. Form 7203 has three parts. Part 1 covers shareholder stock basis, Part 2 covers shareholder debt basis, and Part 3 covers shareholder allowable loss and deduction items. As of the production of this podcast, Form 7203 and its instructions had not yet been finalized, but the draft versions are available on the IRS website. When an S corporation shareholder has a different basis in different blocks of stock, pass-through items are generally allocated pro rata to all shares, regardless of their different basis. If there's a partial stock sale or partial redemption, taxpayers can file more than one Form 7203 for each block of stock and track basis separately. Prior to 2021, when a taxpayer calculated distributions in excess of basis on the basis worksheet from the Schedule K1 instructions, the resulting capital gain did not always make its way onto Schedule D. Form 7203 calculates distributions in excess of basis directly on the face of the form, which will carry automatically to Schedule D as capital gain. Another aspect of Form 7203 is that taxpayers have to report and track each loan a shareholder makes to their S corporation separately, and they have to indicate whether the debt is evidenced by a formal note or if it's an open account debt. The form also tracks whether loan repayments result in reportable gain to the shareholder. Whether debt is evidenced by a formal note or is an open account debt is important because the character of any gain on repayments is dependent upon this determination. Gain on debt repayments evidenced by a formal note result in capital gain and should be reported on Form 8949 and Schedule D, whereas gain on open account debt results in ordinary income and should be reported on Form 4797. The same filing requirements for Form 7203 apply to taxpayers who previously had to attach a basis schedule to their individual income tax return. These are S corporation shareholders who are claiming a deduction for their share of aggregate loss from an S corporation, including an aggregate loss not allowed in the prior year because of basis limitations, received a non-dividend distribution from their S corporation, disposed of stock in an S corporation whether or not gain is recognized, or received a loan repayment from an S corporation. However, tax professionals should prepare Form 7203 even in years where it isn't required to ensure consistent basis reporting year over year. You can also stay current with federal tax news and changes with a subscription to Spidell's Federal Tax Letter. To see the benefits of this monthly publication, go to caltax.com and click Publications. That's all for this week. Join us next time for another installment of Spidell's California Minute.